Welcome back to Mostly Growth, the #1 podcast in product monetization.
All right, what are we talking about today?
So Sequoia is out with a new report. They're calling services as the new software. Now, they are about 2 years late in saying services are the new software, but it's a thoughtful report other than being 2 years late. A16Z wrote something similar. A bunch of firms have their own version of this report. But the headline, to sum it up, is the next trillion-dollar company will be a software company masquerading as a services firm.
Is time a pendulum? Because we just had software as a service, and people are like, nope, no, we got to reverse it.
Service as a software, same acronym.
I see where they're going with it. I do have opinions though on the valuations and how these types of companies will trade and where the actual operating leverage and arbitrage is. But yeah, I thought it was a compelling take.
Every founder building an AI tool is asking the same question: what happens when the next version of Claude makes my product a feature? They're right to worry. If you sell the tool, you're in a race against the model. But if you sell the work, every improvement in the model makes your service faster, cheaper, and harder to compete with. A company might spend $10,000 a year for QuickBooks and $120,000 a year on an accountant to close the books. The next legendary company will just close the books.
And that last part, I think, was the most enduring takeaway to me, because the budget envelope is much larger for the labor that go along with the services. So if you look at a company like a Harvey or Legora in the legal space, and you look at what they're being valued at, their valuations are so high that it's extremely clear that the investors are pricing in them displacing labor, not existing software. CS Disco is a traditional legal tech firm out there. I think they're trading at like maybe 3x revenue if they're lucky right now, but they're going after a much larger pool of money, and that's the people and the services.
If you just sell a kind of next-gen software tool to a company and it's meant to be a co-pilot to maybe make the teams more productive, or even if you're selling it to a services firm as this kind of co-pilot model, like there's a limit on what people will spend for the product, and there will inherently be resistance because the team responsible for doing the work is like, am I just training my replacement? Like there's so much anxiety about things. And so instead of selling to companies that would then benefit, if you just sell the full thing as a competitor, essentially, to who might otherwise be your customers, you're able to capture so much more of the opportunity and also like prove out the thesis on whether this works. I mean, the product kind of sells itself. If you're able to say, hey, we're able to deliver as good of a value proposition as this other services firm you're familiar with, but at half the cost of what you're paying, even more responsive than before, and like insert XYZ bells and whistles. Sounds like a pretty compelling value prop when for them, they're actually making way more money than if they were to sell it as a software.
Oh, totally. And so I made a small angel investment in a company called Quanta. And so what they realize is companies are spending a ton on the outsourced accounting and bookkeeping services, right? You also need something like a QuickBooks, a basic general ledger, and there's an opportunity to create something that's AI enabled there, but at the same time replace the services that you're paying a ton more for. And so what they're trying to do is bundle the services. There is a little bit of a human component to it still because there is judgment work around it. But if you have the right policies and guardrails in there, what they're doing is they're going after a much larger budget, which is the outsourced accounting world, which you may be paying. The smallest you can pay to close the books, I think, is like maybe $5,000 a month, but it could be $20,000 a month if you're a company that's double-digit millions and growing.
So I want to talk about examples of these kinds of companies, which industries are most ripe for disruption, and then, what moats look like in this kind of environment. And can everyone just copy the same concept and then we're back to square one? But I guess, would you start one of these businesses? And, if so, where would you go after?
I've been racking my brain today trying to decide which business I would want to start because, it has to be replacing some sort of white collar job. I don't think there's a way to replace landscaping services. A lot of the white collar jobs that came to mind for me still heavily deal with personal information. So I actually had a service come up with my tax estimate for this year. It felt larger than what I thought it should be. And I've been actually debating if I drop all my information that I had in a folder for them into Claude and ask it for what my tax estimate should be. I talked to the firm and said, are you using AI for this? And he said, we've thought about it, but it would require everybody out there to sign a new client engagement letter to say that they're okay with us running their information through large language models. It's a long way of saying I do think there are ways to go about this, but I couldn't think of a service that I would do immediately that wouldn't have the barriers around personal information.
You want to go after a business that's very people intensive, where the vast majority of their costs are people, because that means that like there's just more to automate, right? If it's a business that is like only 20% of the costs are people, there's just not a whole lot of surface area. And then I think knowledge work, to your point, like things that can be done on a computer, much more ripe. I mean, I have to say, I would have thought you might have said headhunting services or recruiting firms. You're starting one of these businesses and you're going the manual route.
That's my moat. When others are zigging, I'm zagging. I'm there. I'm shaking hands.
I want the highest cost basis possible.
No, I've hacked hopefully both sides of the marketplace from like finding qualified candidates, but then also the CFOs who are the buyers there. But I do think that the crux of any recruiting business is the relationship building and linking people up. I do think that you can source a bunch of great candidates, but I don't think there are many CFOs or hiring managers who are willing to pay an agent basically, or a fleet of agents to fill that position, because the cost of hiring the wrong person is such a big area to get it wrong.
Hey, thanks for listening. We'll be right back after a word from our sponsors.
If you run go-to-market, you already know the problem. Your go-to-market data is everywhere. Ads, CRMs, sales calls, marketing, spreadsheets, but you're still guessing what to do next. HockeyStack is the AI platform for modern go-to-market teams that collects all your customer data and unifies it into a single system of action. Then you deploy AI agents that prospect the right accounts, help reps close and upsell deals, improve forecast accuracy, and automate what's already working across sales and marketing. Instead of running 5-year-old processes manually, your go-to-market team finally has agents that understand your ICP, your funnel, and your buying motion, and they execute on it. That's why teams like RingCentral, Outreach, ActiveCampaign, and even Fortune 100 companies rely on HockeyStack to cut through the noise, eliminate wasted spend, and make better go-to-market decisions faster. That's HockeyStack, the AI platform that helps go-to-market teams make space to think and win. Here's a growth tax nobody talks about. Every new monetization model you ship creates a nightmare for your finance team. Add usage-based pricing? Now you're tracking consumption against commitments. Launch product bundles? That's multiple performance obligations per contract. Offer mid-cycle upgrades? Woo! Good luck reallocating revenue manually. But that's exactly where RightRev shines. RightRev is the revenue recognition engine built for companies that can't afford to let accounting slow down growth. When your RevRec is automated, your product team can ship new pricing without asking finance for permission. And your sales team can close creative deals without worrying about downstream chaos. To get up on my CFO soapbox for a sec, I love talking about creative pricing models, hybrid pricing, credits, tiered usage. But I've seen too many companies where the sales team is celebrating a huge quarter while finance is still trying to figure out how to recognize half of it. In a world where your pricing model might change 3 times next year, that flexibility is everything. If you want to scale your monetization without breaking your books, visit RightRev.com. That's RightRev.com, where modern monetization meets bulletproof accounting.
Here's a question. When was the last time you really had time to focus on growth and not chasing contract renewals, tracking shadow IT spend, or explaining rising software costs to the board? Yikes! The truth is, traditional spend management is broken. If you're still piecing together data from 5 different systems just to figure out what you're actually spending, while vendors keep on pushing those auto renewals and price hikes, my friend, I got a solution for you. That's where Tropic comes in. Tropic is an intelligent spend management solution that consolidates your spend data and processes into one unified offering, enabling insights and decisive action. It doesn't just show you where the problems are, it helps you solve them. From spotting hidden optimization opportunities like duplicative spend, to automating those painful procurement workflows, to giving you the best market data that turns every vendor negotiation in your favor. Tropic combines smart insights with real human expertise to keep you ahead of the curve. And I can say firsthand because I've used them for over 2 years. Their SaaS platform helps me with price checks. It helps me keep my calendar organized of when renewals are coming up and I can actually visualize it. And let me say, it saves me more than 10 hours a week on vendor management, and we've saved a ton on renewals. I'm walking into the boardroom with a lot more confidence. Isn't it time to turn your spend management into your competitive advantage? Visit tropicapp.io/mostlymetrics. That's tropicapp.io/mostlymetrics.
I hear you, but with most of these services as software businesses, there's still going to be like a person, right? There's going to be maybe an account manager or forward deployed engineer, right? Like this isn't getting rid of people entirely, but it's about trying to give the client the experience of a white glove service when it's really like productized under the hood. So I was in consulting for a while. It was strategy consulting firm focused on monetization. It was extremely people heavy. We would put like 3 to 4 consultants on a given project. And then Price Intelligently came in and they productized a lot of it. Now, I don't think they used AI, but they had methodologies that would go, automate pricing surveys, for example. So you could get the work done in half the time with like 80% fewer resources involved. It's about trying to keep, what is good and that people enjoy about relationship-based like experiences, but have that be the only place where people are and not doing the more repeatable work.
So that's a distinction because we are deploying AI there. And so I went and I actually built a scraper that takes this list of 250 CFOs that I know and their companies, and it looks at their ATS systems and what roles they've posted each night. And then it automates an email to me and Callie, my recruiting partner, and said, I'm just making it up here, Airtable has listed a director of FP&A. And then we can reach out to them. That would normally at a recruiting firm, you'd have to have a BDR going through all these lists and then reaching out to them. And then we go a step further where we can pre-draft an email that's been templatized around like, hey, we saw this. This is the picture on our company. I think there are areas for like to take a tax company that's traditionally just been all on paper and stuff and supercharge it with AI. I do think, though, that we're pretty far away from like completely no humans there at all.
When this also probably should show up in the profitability profiles. Like a lot of services businesses are actually like fairly profitable because they can charge a lot, but it's hard for them to scale. And so even though they're profitable, if they want to grow, hiring people that have the expertise that do what they do is challenging. Selling more clients is tough. The business isn't always like predictable. Like you have peak periods where you're at capacity, you've got low periods where people are sitting on the bench. And so it's just really difficult to scale a services business. And I think with AI, at least it gives you more of that flex capacity and ability to scale, and also ability to maybe get to, instead of maybe 20 or 30% margin profile, get to like a 50, 60% margin profile.
And I think it all goes back to utilization of the people that you are paying a W-2. I was talking to my friend Nico, and he works at a firm that does financial due diligence on companies. And he was telling me how his utilization rate this year was much better than the year prior, which meant that they didn't have to hire as many people on the team, which means that he gets a higher bonus. And then he was playing it forward, saying that if I can use some of these services that are now coming out that help me basically take on more workload, more clients over time, that he'll end up getting paid more. And I think there are a lot of investment banks and accounting firms out there who've traditionally provided these, like, you got to throw another person at it, like a PwC, which is where I started my career. And now they're looking at it like, oh shit, if our average utilization was 78% for associates last year, can we use AI to get it to 88? Because that all falls to the bottom as margin.
I wanted to talk through which of these is like most ripe for disruption, that is basically either dead or going to be a zombie because of if they don't reinvent themselves to be AI first. Software development firms like Outsourced Dev from India.
It's so funny. I think that these firms are actually going to be able to do 10 times more. A lot of people are yelling that all these software chop shops, for lack of a better term, who will build you like your app idea, because I've paid these companies before, are all going to die. I think they're actually going to use AI and be able to take on 10 times as many of these crazy, like build me a gym app or a dating app than they were before.
So this is companies that are, I guess, ripe for disruption with an AI first approach, right? So like service as a software where you're basically totally reinventing the service model, but you're fundamentally like to the customer delivering it as a service as opposed to as tech. The need for these services exists. There's a lot of people that have good ideas, but don't know how to build software, and like they could go to a vibe coding app, but they're going to probably screw it up. They're not going to customize it exactly to their specs. Then there's also dev firms, I guess, that would just be lower cost resources. So instead of hiring people in Silicon Valley, you're trying to get people that have similar expertise out in a lower cost geo. I think to me, like, there's just so much more productivity to be gained from AI tools that you actually don't probably need that many software developers to build, but you need the right people who are really capable of using these AI tools. And then people that are also really good at taking the client's request and turning that into product specs. But I think that that's a space that, like, if anyone is operating in a traditional manner without AI, it's hard for me to think of those companies as being able to compete.
So is there a framework we should be evaluating these through, or are all jobs the same depending on if they're done like in-house today versus it's something that you're used to paying for?
Well, so Sequoia has a useful framework. It's a 2x2. Their axes are, outsourced versus insourced, and intelligence-based versus judgment-based. So what they mean by intelligence versus judgment would be like, if it just requires following a set of instructions, but maybe having specialized expertise, that just requires intelligence, right? It's not creative. You're not trying to do something different. You're like coloring in the lines. Things that require more intelligence, less judgment, are more ripe for disruption. The other factor of insourced versus outsourced is this something that you normally hire a services firm, whether in the US or somewhere else, to go do? So there's like budget attached to it. You're not doing this yourself. Or is this something where you normally hire internal specialists to do yourself? And their idea is, for things that are outsourced and require intelligence over judgment, that's the number one bucket where we'll see this services as software concept.
Okay, I get it. So just to play it back to you, something like the tax code, that is something that's probably more intelligence based. I don't know, depending on who you are, maybe it is judgment based.
So some examples they put in there were accounting and audit, claims adjusting, payroll and compliance, real estate closing, KYC, AML, a lot of those things that, like, the jobs kind of sound kind of boring, but you have to have specialized expertise to do them well.
Okay, and there's a ton of minutia there that you have to follow in order to get it right. But I think what you're poking at is there is a right answer if you follow the guidelines that have been given.
Exactly. And so just write really bespoke guidelines. But then examples of things that would maybe require intelligence but would be insourced would be things like fund administration expertise. So for like managing a VC fund or some other fund, it's mostly intelligence over judgment, but it tends to be in-house as opposed to outsourced. There's also like, your investors that you want to make sure they feel really satisfied with what you're doing, right? Other examples they had were supply chain and procurement, medical admin, and pharmacy back office.
I think I get it. Let's play this game.
All right. So maybe let's start with one that I feel like I can't go on LinkedIn without seeing it's dead. Management consulting, McKinsey. Did McKinsey just get killed from AI?
Dude, I think like people like fundamentally misunderstand what McKinsey does. Yes, they give you a set of very pretty slides, and that is the work product, but it's all about the knowledge that goes into it. No one is paying McKinsey just because the slide looks good. So you're paying for two things, really. You're paying for the judgment and the at-bats that they have had at solving similar problems across companies that are of varying scales.
You're paying for a 23-year-old's judgment from all of these projects that they've done. You've seen a typical like management consulting team, haven't you?
I've definitely been pitched by the person who's been at the companies. Maybe they have a slide jockey in the room doing that. But dude, I've also hired people from McKinsey before who actually didn't know how to make slides.
Oh, they just draw them out, or like they give instructions and then they have the slides get made by someone in India.
That part wasn't being displaced before. Like people think that it's just McKinsey people creating the slides. They weren't even doing that before. But the real thing that people pay for is the ability to point to a quote unquote expert third party who's supposed to be neutral and say, this is the best decision. I'll give you an example. So comp consulting, you know a thing or two about that, right? You hire people to say how much the exec should get paid, but it's also kind of a wink and a nod because they're not going to get hired if they don't tell the board that the exec should get paid a certain amount. But you are outsourcing not the responsibility, but like the
brand. It's
yeah.
like the brand, the trust. that's what you're paying for more than the expertise.
And if you fire McKinsey, who are you going to blame when you fuck up inevitably? Like it's also a great scapegoat for any bad decision that you make.
Yeah, I think McKinsey is one of those examples, or like management consulting in general, where something that is outsourced, right? But it probably requires more judgment over intelligence. Like you can come to a very different conclusion with the same set of data. And it kind of comes down to how good they are at like telling a story around the data that's compelling, how good they are at getting buy-in and like building trust with different stakeholders, and then people's confidence in their ability to answer this in a way that's different from maybe what you would figure out on your own. So I feel like that's maybe one where AI really should be a co-pilot. Like it's still going to be very people centric, but maybe instead of having 3 consultants on a project, you have 2. And the senior people really carry a lot more weight because you probably don't need as many like junior analysts doing the grunt work. You just kind of need like an experienced person that can be that like person that has the gray hair in the room that convinces everyone this is the right idea.
And to sell the deal. Because most people also misunderstand that if you're a partner at any consulting firm, your main job is sales.
That's one end of the spectrum. Another end of the spectrum is outsourced call centers.
I feel like you're just setting me and Ben up again to talk about how bad customer support is these days with all the different tools we use. I think that is dying. I really do think it's dying. Decagon is really good. There are like some nuanced things where the tech itself just gets in the way. So I was trying to do the customer support for a pharmacy to get something refilled in a different state. And it just wouldn't put me through to a human. I swear I hit every number on the keyboard. I said human 10 different times. And I would have totally used, they're like, we'll text you a link so you can transfer from one pharmacy to the other. Doesn't work. They have to get over that problem first, I think. But in the next 5 years, I do see a steep decline in the customer support staffings.
So there's a company I'm familiar with called Crescendo that is trying to be like a combination of, say, an Intercom Fin and like a Decagon, but also the services around it. So whereas right now you maybe bring in an AI agent, maybe that AI agent solves 70% of cases, like the simpler, like less complex ones, and then the more complicated ones get escalated. The idea with Crescendo is we actually have a full sort of team that could be your like people-centric customer service, and we have a great AI product. And so we can sell it to you as one solution. You're not managing the AI and separately hiring people. It's on Crescendo, like to make the AI better and then lower the cost to customers or like lower the cost internally.
Because traditionally the model, in order to save money, was to hire 200 people in Bucharest, Romania, who make only 30% as much, but then you still have to buy technology that is on a per seat basis for them. And then you have to also make the bet that they're going to be able to use it and be really good at it. What you're saying, you de-risk both of those scenarios.
Exactly. You hire the AI-enabled customer service center in Bucharest, and whether they've got 100 employees working for you, 150, 200, that's kind of on them and how good they can train AI models, but you're paying for the service. Let's go with another one. How about law firms?
Well, according to my lawyer, Claude, who drafts all our NDAs and sales contracts, I think this one is going to go by the wayside. Other than M&A law that I've dealt with, which I do feel like has a high degree of EQ that people underestimate on getting a deal done and incentives, on contract law in particular, I've met some really bad contract lawyers that like miss stuff, who don't understand why we're doing something or the real question we're asking. So I do think parts of law are definitely dead.
People in their head think of law as like going into a courtroom and like, I object. And it's like that charismatic lawyer. And I feel like most of it in a business context is contracts, drafting contracts, reviewing contracts, or like navigating disputes, negotiations. Like there's just so much of the knowledge work that could be done by a Claude. But I think where things go to me is probably having expertise around even like building your own contract playbook. So like, what are the clauses that you care a lot about for your stage of business? And how do you like customize the way Claude reviews things? But that's maybe either like you with AI, or there's a service that's half the cost of hiring a lawyer and they help you with that like intake, but then they're using AI behind the scenes.
Okay, so I'd like to update my answer. I hope I can do that since it's our show. I think the biggest gains in respect to law are going to be replacing the in-house counsel work and delaying how soon to hire like a full-time GC, because there is a ton of work that goes on that a CFO or a head of finance is like, shit, should I just make a call on this and save like $10,000? I've paid tens of thousands of dollars just for boilerplate NDAs, or for NDAs to get checked, or for a summary of what changed in this set of red lines between a customer.
And AI is really good at doing that nowadays.
I ran one through today on a recruiting contract because it was like, I can't understand this. There are a ton of red lines. It told me very quickly that, oh, they changed like the payout gate for the second milestone here. That's something traditionally that like you'd be making a hard call. Is it worth it to pay $5,000 for a lawyer to look this over? Because it's the same type of stuff you're doing every day. Same thing around like enterprise sales contracts or maybe mid-market sales contracts that have to go through GC.
Yeah, you're maybe going to use a Claude. There's also tools like a GCAI is an AI native kind of version of that, but that are much more accessible to non-lawyers, that gives you the expertise of a lawyer. Another benefit of that is just speed. Like if you send something to an outside counsel to review, yeah, maybe you get something back same day, but often it's like the next day and the deal's dragging on. And some of these things, you just want to make a quick decision and move on. Let's go one more. You mentioned making an angel investment in this space, but what do you think about accounting firms?
I don't know. You should just refresh LinkedIn and see if there's some thought leader out there spouting how the close is dead. First of all, you don't have to close the books in one day. I've never been in a scenario where someone was like, you know what, we really need the financials on this random day of April, I don't think accounting is going to be replaced, but I do think that we're going to have our first 10x accounting and finance people that we didn't have before. You talked about the 10x engineer. That's possible now. I truly think that the finance and accounting people who are willing to build alongside AI and use it as a co-pilot are going to be able to go even further and get further in their careers.
You keep making the case for why this service as a software opportunity makes sense. Like it's not either or. Like people want the expertise. They want access to a 10x accountant. If you're building a company, you could have a 10x accountant on staff, AI under the hood, sell for 25% less than all of your competitive firms, and deliver a better experience to your customers. Like it's a super high margin business that customers love and that gets the best of both worlds.
Yeah. I'm thinking of my dad's accountant growing up, Robert Pagano. He runs a shop out of the North End. I bet it's like 5 humans in there going through everything each month. It's funny. All the private equity firms are buying up all these software as a service companies. Now are they going to roll up all these service-based companies and just fill them with like younger, hungrier, tech-savvy people who can take on 10 times as much client work with just a couple of people in-house to say yes or no?
Whether they do it will depend on how valuable are these companies going to be and whether there are moats in these spaces. I guess, what do you think moats look like here?
One of the moats was they already have all your files and you completely forget where your tax filing from 2022 was, right? They also know the history of why you made certain decisions of like, I didn't claim a child that year because they were born in January instead of December, or we moved locations, or I was in this state for part of the year. So they have that historical knowledge. I'm not really sure what the moat is anymore. I think it's really just going to be the speed to value and then also the cost along with it, which makes me worry, does it become like a race to the bottom?
Yeah, but I guess to your point, there is some level of stickiness. Like people are not wanting to go change their service provider that frequently. And so maybe they'll look once, or like maybe you can change the decision when they're first buying. But then after that, if they're happy with the service, they're probably going to keep going. I also think like relationship matters. Like these are often businesses where you get to know the people that are running them. In theory, these businesses could actually invest more in like the white glove service if they're having AI do the actual work.
Well, the example I gave of my dad's accountant, it's someone I think he went to high school with in Stoneham, and that's why he used them for 35 years. Are you going to be as loyal to a service that is essentially faceless? Right? There are some humans making sure that stuff gets done and it gets sent to you, but it's less of a relationship-based business.
From a brand standpoint in professional services, it often comes down to like logos of who you've worked with or the expertise of the leaders of the business. So if you have a CEO or something, or the head of your account is like someone that has 30 years of experience and is like the best expert and is on the very first call with you, you're like, oh shit, these people know what they're doing. They know what they're talking about. Like for me as a former strategy consultant, everything in the pitch was about our expertise. Like we would be selling the expertise from like minute one, and we would try to do that by being very prepared for sales calls. And then our deck was all about like, look at who else we've worked with. It's very similar businesses to you, and we're even going to give you some free advice now, so you feel like you need to hire us.
I think some of the moat is going to be around how specific you can be to someone's needs. So I saw this guy on LinkedIn, and he does fractional CFO work for companies in the sports management industry. So if you had like an app that served like kids training for something, or if you were like farm league for like the Pawtucket Red Sox or something, he only did sports stuff. I think there are going to be a lot of niches that pop up within each of these industries. So maybe, I don't know, maybe it's like tax prep for people in the media business. Me and you were talking about insurance, how hard it was to get insurance in a brokerage there for someone who's in the podcasting space. I do think some of these services can now be more scalable for specific niches, where before it would have been too hard to start that.
Yeah, I like that. Like, I feel like a lot of services businesses right now are like local services, like the expertise is the geo. But like for me as a solopreneur building like a media business, a lot of people like don't get that, like insurance. But if I knew, hey, this firm was the foremost expert firm for my hyper specific niche, I wouldn't care where they were based. Are investors actually going to value these businesses, and how much do they value them relative to classic software companies?
I was hoping we were going to get here, because classic software companies today, many of them are not profitable at all, but those that are, they're trading anywhere from, call it 20 to 30x free cash flow. So we're going to talk about profits here, which is the traditional way to value companies. Services-based businesses, they trade at somewhere between 8 and 12x free cash flow. Are we actually now creating companies that are only valued on the profits they can generate, right? Because you're not thinking about it as like a hyper growth business anymore that is someday going to generate profits. You want those profits now, but also trading at a lower multiple. I do not think that these companies that we're speaking to are going to be valued at the same amount that tech companies have historically been. But maybe that doesn't matter anymore.
Bull case for this, right, would be services themselves don't get commoditized that much. So the price that you can sell these services at stays pretty high. And so you can probably deliver an AI-enabled version of this at like huge margins, like 50% plus gross margin. And so like that would be part A of the bull case. And then part B would be, because these are so software enabled or AI enabled, outside investors kind of treat them a little bit more like tech companies than like classic services firms. So the multiple on profitability is like somewhere closer to software. If you believe those two things, these look like really interesting spaces to be, but those are big assumptions.
But haven't we seen this play out before? Like Adam Newman wanted to be valued as a tech company, even though it was basically just lease management.
I mean, it all comes full circle.
It really does all come full circle. That's my biggest takeaway from this podcast, that suddenly things that were not thought of as sexy seem to now be the opportunity where there's margin and real cash flows.
Mostly Growth is a Mostly Media production. Executive produced by Ben Hillman. That's me. Additional production by Steve Sarasoli. Nothing said on this podcast is intended to be business or investment advice. It's the sole opinion of CJ, Kyle, and Ben. Just some guys who love talking growth. Mostly. If you like this podcast, hit subscribe and give it 5 stars. It'd only take like 2 seconds and our algorithm overlords love it. Drink water, call your mom, and have a great day.